Welcome to another SUI update. Today, I want to zoom in on the lower time frame to get a clearer picture of what is actually happening right now, because we are starting to see a small short-term upside reaction from support. It's not very obvious at first glance, so I'll hide the upper sections of the micro support zone, which we don't really need anymore. Now, whenever we're dealing with a reaction to micro support, one thing becomes absolutely critical: context. Without context, a support reaction on its own doesn't really mean much. The first thing to recognize is that this move to the upside is counter-trend. We are not looking at a 5-wave impulsive move higher. What we are seeing instead is a 3-wave structure, which I'm labeling as an ABC move. This is important because we already saw a similar 3-wave move earlier, from the November 21st low into the December 3rd high. That November 21st low was a key level across the market where many cryptocurrencies formed local bottoms. The stronger charts are still holding above those lows. SUI, for example, is still holding above its November 21st low, which formed around $1.31. Other charts like 8A failed to hold that level and are already trading below it, which may suggest that their next decline has already started. Now, SUI could also already be in the next decline. However, as long as we avoid a decisive break below the $1.35 to $1.36 support zone, the door remains open for a wider ABC corrective structure. In previous updates, we discussed the possibility of a larger wave 4 correction. The reason is that a 3-wave move up, followed by a 3-wave move down, can often set the stage for a 5-wave advance afterward. So structurally, we could be looking at 3 waves up, 3 waves down, followed by 5 waves up. If we zoom in, we can see that after the most recent 3-wave decline, we did get a very small micro 5-wave move up from the December 18th low. That is the basis for the current thesis. This could be the start of the next leg higher. But to be very clear, this is not a major breakout, and it is not a full trend reversal. We are simply talking about a bounce, an extension of a wave 4 correction. This scenario only remains valid as long as price holds above the $1.35 to $1.36 area. A break below the December 18th low, which is very close to the November 21st low, would invalidate this structure. Support could still be found around those previous swing lows, but the chart overall would continue to look fairly weak. Right now, what we have is just a first reaction to support. And once again, context matters. It is the weekend. Volume is low, and weekend price action often comes with fakeouts and unreliable signals. On top of that, this move is still counter-trend, which means any upside move is likely to be weaker and corrective in nature. We also need to see confirmation. If we do not see a clear 5-wave move up from the most recent low, which formed on December 26th, then this move could simply remain a corrective bounce. For further confirmation, we need a higher low followed by a higher high, creating another micro 5-wave structure. That would support the idea that a third wave within the C wave is starting. On the upside, a break above the $1.49 to $1.50 area would help keep upside momentum intact and strengthen the short-term bullish case. On the downside, a break below the December 26th low at $1.35 would significantly reduce the chances of any local upside continuation. So for now, we maintain a very cautious stance. Potentially bullish in the very short term, but still structurally weak overall and highly dependent on key support holding. That's the update on SUI. If you found this helpful, please hit the like button, leave a comment, and subscribe for more updates.